Hi, my name is Muhammad Taufik bin Shamsir, metric number 2019723.
Assalamualaikum, my name is Aisha Dana binti Nazrul Hisham with matrix number 1911962.
Assalamualaikum and hi, my name is Putri Mariam with matric number 2013832.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faiz Daniel bin Imran and my matric number is 1910875.
Our group has decided to analyze two companies, which are EKOVEST Berhad and Top Glove Corporation Berhad. EKOVEST Group has been involved in commercial operations, primarily in civil engineering and building constructions. EKOVEST Berhad has grown from a solely construction firm to a multifunction construction-based entity. And as for its achievements, EKOVEST Berhad has involved in the development of Petronas Twin Towers and has executed university construction projects. As for Top Glove Corporation Berhad, it is the world's largest manufacturer of gloves. It was established in 1991 and is headquartered in Malaysia. Moreover, Top Glove has a comprehensive product range which includes non-glove segments to facilitate the demand of both healthcare and non-healthcare customers. The firm has expanded its operations in several countries and has been exporting to hundreds of countries worldwide. Now, we'll be looking at the financial performance of both companies. Firstly, for quick ratio, EKOVEST ratio falls from 2017 to 2020, proving that its quick assets can be converted into cash in a shorter time in 2020 during the COVID-19 pandemic. Meanwhile, for Top Glove, the value decreased constantly from 2017 to 2019 and increased hugely in 2020. This indicates that Top Glove has more sufficient cash to cover its short-term obligation during COVID-19 pandemic than the years before the pandemic happened. Next, for debt ratio, EKOVEST ratio remains somewhat constant for the 4 years. EKOVEST has more assets than its liabilities, thus the ratio can be defined as good debt ratio. While as for Top Glove, the debt ratio has increased gradually from 2017 to 2019, which is before COVID-19, and has dropped drastically in the following year during the pandemic. It is due to the company having less liability and has more assets during the pandemic as the business is doing well.
Return on equity for EKOVEST is declining from 26.8% in 2017 to 2.53% in 2020 because they failed to generate more profit from its existing assets. The return on equity for Top Glove is fluctuating from the period 2017 to 2020. After the pandemic, the ROE has increased from 2019 to 2020 by 60.13%, indicating that the Top Glove's profitability in relation to its stockholders' equity has drastically risen. EKOVEST Berhad dividends per share slightly increased from 1.2 cents to 2 cents for the period of 2017 to 2018. However, from 2018 to 2020, the DPS fluctuated from 2 cents to 0.98 cents and 1 cent respectively. EKOVEST Berhad earnings per share skyrocketed for the period 2017 to 2019 from 5.37 cents to 6.45 cents, then it dropped to 4.77 cents, about 26.05% in 2020. The dividends per share of the company is 8.5 cents in 2017 and it decreased to 4 cents in 2019. However, for the year 2020, the dividends per share shows an increased trend to 8.5 cents. Top Glove's earnings per share showed an increase from 26.22 cents in 2017 to 33.92 cents in 2018. Then for the year 2019, it shows a significant decrease which is 14.21 cents and the EPS shows a rapid growth as it increased to 67.6 cents in 2020.
And now I will present about critical evaluation for EKOVEST Sdn Berhad. Revenue for 2020 is recorded 5% lower than 2019. Revenue due to reduction in rental income and decrease in traffic volume. In 2019, most of revenue were contributed from EcoCeras, also known as Nucleus of Ceras, was fully completed and compromised with hotel, mall, and office tower. But during MCO, the rental in EcoCeras Mall and traffic volume dipped to approximately 20%. In terms of final dividend, it remained the same with 1% per share with single-tier dividend. And there are issuance of new shares which amounting to 41 million shares. And lastly, in 2019, EKOVEST also acquired PLS Plantation to expand to another business and it as a long-term project.
Moving on to the critical evaluation for Top Glove in 2019 and 2020. For 2019, the final dividend payment declared is for sale, which is quite lower due to the increase of price of Nutella Tech. Secondly, it is due to the acquisition of Berhad, the largest surgical glove producer. In the first quarter of acquisition, the company bear loss. The company also have allocated 400 million of capital expenditure for the expansion of the additional 5 factories. Focusing on expansion caused the company to declare a lower dividend payment to its shareholder. In 2020, the profit earned by the company increased by 51% that caused the company to declare a 2-for-1 bonus share to its shareholder. This is due to high demand of gloves in health sector because of COVID-19. With a great performance, the company agreed to change its dividend policy by giving a quarterly dividend payment instead of semi-annual basis.